Welcome back. More and more homeowners are abandoning home insurance because of skyrocketing costs.
Homeowners are rolling the dice on catastrophe and other risks. What's causing Americans to drop home insurance coverage? Let's find out. Due to rising costs, more Americans are choosing not to purchase home insurance, putting them at a significant risk of losing their homes and personal items in a disaster. According to Bankrate, the national average for home insurance, based on an annual policy that provides up to $250,000 in dwelling coverage, increased by 20% this year to $1,428. Approximately 12% of US households choose not to get insurance due to rising premiums, which have been attributed to everything from climate change to inflation driving up labor and material costs. According to the journal's figures, a little over half of individuals who do not purchase plans have yearly household earnings of less than $40,000. A typical homeowner's insurance coverage will often protect against theft, vandalism, wind, hail, lightning, and fire. Generally, a normal policy does not cover flood insurance. Some homeowners choose to go bare when their insurance company refuses to renew their policy because of a higher chance of bad weather. A fair plan is an option for those who can't find insurance willing to cover their belongings. Fair access to insurance requirements, or FAIR, is a state-run initiative that receives funding from both private insurance providers and taxpayers. The plan distributes the risk by allowing multiple companies to insure a property under a single policy. If an insured homeowner with a FAIR plan needed to submit a claim, each participating insurance company would pay a percentage of the damage. Major insurance companies have already withdrawn from hurricane-prone Florida. Two of the biggest insurance companies in the nation, State Farm and Allstate, recently said that they would no longer offer new homeowner policies in California because of the elevated risk of property damage brought on by wildfires spreading. Farmers Insurance, the insurer that has reduced its clientele in Florida and California, declared on Monday that it was laying off 2,400 workers, or 11% of its workforce. According to Matthew Carletti, an industry analyst at JMP Securities, the cost of reinsurance, a sort of insurance used by insurers to minimize risk, has increased by between 30 to 40% between 2019 and 2022, while the cost of rebuilding and replacing damaged properties has increased by 55%. According to homeowners, they're prepared to assume the danger of losing their house and paying for its replacement. I have enough money in savings to move into a condo in that event, but losing my house would probably be devastating financially, Larry Fahrenholt, a 73-year-old retired attorney from Los Angeles, told the Journal. According to Fahrenholt, he hasn't had insurance for the previous 25 years on his 1,100 square foot home. Foregoing home insurance has saved him more than $50,000. Financial advisors are warning homeowners about the dangers of not having insurance, especially given the increasing frequency of extreme weather occurrences. Financial advisor Noah Damsky of Los Angeles told the Journal, "It's a risky proposition to go without home insurance, and you need to fully understand the financial consequences if you lose your home." The US economy entered a period of high inflation soon after the pandemic recession began to recover because of a combination of factors, including rising demand, severe supply disruptions, and labor shortages that led to significant imbalances and inflationary pressures in the economy. However, inflationary pressures have lessened recently. As the Consumer Price Index indicates, the rate of inflation has decreased from its recent peak of 9.1% in the summer of 2022 to 3.1% in the beginning of 2024. Have the local companies in the New York, Northern New Jersey region experienced a reduction in inflationary pressures? Businesses were questioned on price and cost increases in the New York Fed's February business surveys. The findings show that during the past year, the rate of increasing prices, wages, and costs has significantly decreased. Additionally, businesses in the area anticipate further moderating of cost and price rises and the general inflation rate in the upcoming year. Although inflation is still greater than desired, significant improvement has been achieved. Since June 2022, inflation, as assessed by the Producer Price Index, has increased by more than 10 percentage points, while inflation, as measured by the CPI, has decreased by 6 percentage points. The Empire State Manufacturing Survey and Business Leaders Survey from February included supplementary questions about anticipated and recent changes in the costs, salaries, and selling prices of businesses. The findings show that in line with trends in general inflation, regional businesses are witnessing a slowdown in the rate at which their expenses and prices are rising. While firms reported an average cost increase of 11 to 13% for 2022, such increases fell to 5 to 6% over the past year. Wage increases in 2022 were around 5.5% for services firms and 6.4% for manufacturers, and slowed to 4.3% and 5.3% respectively over the past 12 months. A similar pattern was observed for selling price increases, which fell from an average of 7.3% among service firms and 9.5% among manufacturers in 2022 to an average of 5.3% and 3.2% respectively this past year. Firms expect all three measures to moderate further over the next 12 months. For both types of firms, cost increases are expected to slow to around 3.6%, wage increases are expected to slow to 3.8%, and selling price increases are expected to fall to around 3%. Firms were also asked about their expectations for the overall inflation rate in the economy over the next year, a question which is also posed in surveys conducted in May and December of 2022. As the chart below shows, firms' median year-ahead inflation expectations have come down noticeably. In May 2022, when inflationary pressures were near their peak, firms' year-ahead inflation expectations, as measured by the CPI, were above 6%, though longer-run inflation expectations remained anchored. By the end of 2022, year-ahead inflation expectations had already come down slightly. In our most recent survey, after more than a year of moderating inflationary pressures, the overall inflation rate is now expected to be around 3% over the next year, the same as what consumers are expecting, according to the New York Fed's latest survey on consumer expectations. Many Americans are still pessimistic about the status of the economy, and the cost of basic necessities like food and rent is still a cause of misery. The good news for customers who are struggling financially is that economists have some information. Really. According to forecasters, inflation will continue its sharp decline that began in June 2022, when it reached its height of more than 9% in 2024. Global Chief Strategist Dave Kelly of JP Morgan Asset Management describes a very steady decline in inflation throughout the next year. The Federal Reserve may decide to lower its benchmark interest rate as a result, lowering the cost of borrowing for both individuals and companies. Recent government data indicates that inflation is moderating. The Consumer Price Index rose by 3.7% in September over the previous 12 months. This is not a 1 or 2 month story. The economy is cooling, and that will put further downward pressure on prices, Gregory Dacko, chief economist at EY Parthenon, Ernst & Young, told CBS Money Watch. Undoubtedly, annualized rates of change in prices are not how consumers perceive the state of the economy. A gallon of milk or gas can cost less or more than it did a year ago. Not surprisingly, half of the respondents to the Bankrate study this week said that their financial status had gotten worse since the last presidential election in 2020. Prices for some necessities are still much higher than when inflation started to soar in early 2020. October saw a 5-month low for one measure of US consumer confidence due to concerns about rising prices, according to statistics provided by the Conference Board at the end of the month. According to Dana Peterson, chief economist at the Conference Board, consumers continue to be preoccupied with the rising prices in general, and for grocery and gasoline prices in particular. Consumers also expressed concerns about the political situation and higher interest rates. Is home insurance the only thing Americans are giving up on due to rising costs? Tell us in the comments below. That's all for now, thank you so much for watching. If you enjoyed this video and found it informative, don't forget to hit that like button below. And if you want to stay updated on more great content like this, make sure to subscribe to our channel by clicking on the red button and ringing the notification bell so you never miss any future content from us.